Hello and welcome to the week ahead from here in beautiful sunny California. It is Saturday, August 23rd. We had quite a week in the markets, which ended with a big move happening on Friday. So wanted to talk first this week. I'm going to go through exactly what I'm thinking for the week ahead. And then I'm going to jump back to a follow-up from last weekend's video where I talked about how I felt like there might be a move into IWM from big tech and what I did and what I should have done. And so this episode is called Learn, Plan, Execute, because I sort of had a good sense for what was going to happen. I got my timing kind of wrong on how it was going to go down, and I didn't execute well. And so I didn't have a bad week per se. I just didn't have an awesome week, which I should have had. And there's actually some stuff that I learned this week that I thought was really awesome and related to options. You know, if you've been watching me for a while, you know I have an interest in options trading. And so I'm going to talk a little bit more about that. But first, let's talk about SPY and QQQ and what exactly went down. So we did have a nice, healthy retracement of that move. And if you draw a fib from, where was the top? Right there. You see it retraced 50% of the move from the low to the high and back again. And then that was set on Wednesday, which was kind of an interesting day where we had this hard flush and then a pretty decent rally into the afternoon. And I think people were feeling kind of bullish. I was not. I was still thinking like, I was aware that we had this catalyst event coming up where Fed Chair Powell was going to be speaking from Jackson Hole on Friday. And I just had a feeling like I didn't think we were going to rocket to the highs from here on Thursday. Plus, anytime we make a big move on the daily, I find that the day after tends to be a day of balance. We often get inside days. And so I actually bowed out of trading completely on Thursday and just focused on some work that I wanted to do in my trading app around options. And so I didn't do any trading, which is a kicker, and I'll come back to that later. So anyway, we had this drop down 50% retrace, which means, you know, it still could be a bull flag. If it gets below, 50%, then it's a higher likelihood that you then set a lower high and then a lower low, or you chop sideways for a while and just get a time-based consolidation sideways versus price-based consolidation downwards. So you can see what happened here on SPY is we actually broke the all-time high and then retraced a little bit. But if you look at ES, you see that we did not get a fresh high. But still, the size of that retracement is significant enough that, I don't think it's out of the question that we see all-time highs on ES. We're already now, almost 100% retraced. And even if we balanced or pulled back and then went up, I could see this remaining healthy, especially given the news that we got from Jackson Hole on Friday that they've basically pulled a full 180 and are considering lowering interest rates. So I'm not here as a fundamentalist, but that does make sense that the reaction to that, at least short term, would be positive for the market. And if you check out QQQ, you can see very different than SPY, right? So on QQQ, we had this was the pullback, and now we got to the 618 retracement and then pulled back to 50%. So this is not anywhere near the all-time highs. So big tech still remaining weak, like I had described might happen in last week's video. And I haven't been trading for too long, but I know enough to know that the QQQ typically leads the S&P 500. And the S&P 500, if it tries to do a rally, it's not going to get too far unless big tech comes along for the ride. So what is it all depending on? Well, this week we got NVIDIA earnings. They're happening on Wednesday, I think. Wednesday, and I think they're after the bell. Yep, they are. Now, NVIDIA has been in a weird it was in this choppy price range that I talked about in last weekend's video. So we had a high, higher low, very slight higher high, weak higher low, lower high. Now we got a lower low and we're coming back up from this last lower high to the lower low. We've already retraced over the 618. So that's increasing the odds that we ultimately do set a higher low and continue. But obviously, I don't think anybody's going to be jumping in to go long this thing because we got Monday, Tuesday, and then Wednesday, 3 days of full trading before the earnings happen. So it really comes down to like what's going to happen to the NVIDIA earnings. Is it going to be a blowout? Is it going to send things higher, or are they going to be strongly affected by tariffs, or who knows what? And regardless of whether the earnings are good or bad, how is the market going to react to that? That's really what matters. And so got to wait and see. And so I'm still of the same mindset that I was last weekend. Yeah, I'll go into detail in this on a bit, but you can see IWM much, much, much stronger, pushing past the last higher high on the daily here into a fresh daily higher high. We're now past all of this chop back here, and we're pushing towards, is this all-time highs? Yeah, we're pushing towards all-time highs now. And so IWM very strong, just like I had talked about, whereas NQ, QQQ, relatively weaker. And so where does that leave us? Well, I think, like I said, everything kind of depends on the QQQ for me. I think that IWM can remain strong for a period of time and keep pushing to highs if the QQQ and Nasdaq continue to go sideways and don't drag the whole market down. So if we can see rotation rather than, a real dump of big tech. So a lot's going to matter what happens on Wednesday with NVIDIA earnings. If for some reason the market reacts very poorly, I could see that pulling the Nasdaq down, which would in turn pull SPY down. And if those two start going, you can imagine that other sectors might follow. Okay, so moving on to IWM. So IWM did have this big rally. And like I told you earlier, on this day where we got the inside day here, Thursday, I did not trade that day because I had a feeling that it was just going to be a day of chop, which if you go to the smaller time frames, you can see it absolutely was. So this was Thursday on IWM, which is actually a little bit more bullish than others. Let's go look at QQQ, complete chop fest. It basically closed exactly where it opened right here. We had SPY, chop fest, and look at anything. Look at NVIDIA, just complete sideways. There's no edge for me on a day like that, and so I didn't trade it. And sadly, if you look at IWM, I didn't, in last week when I made the weekly video, we had this rally up. We'd pulled in a bit on Thursday, a little bit of a down day Friday, and I was expecting it to actually hold this trending orange line, which is the 5-day simple moving average. And it didn't. I got long somewhere in here and I got long calls. And then on Monday, it went up a bit and then up a little further and then came all the way back down. And I was in the red on these calls. And the calls that I had were for Friday. And so as it was going down lower and lower, I was basically ready to write these off. Now, this was just a small position. And whenever I trade options right now, I'm always trading them in the mindset of I'm willing to lose 100% of the premium that I'm putting into these call options. So if they go to zero, that's okay. It's just my full stop that I was already mentally prepared to take. And sadly, the only thing I did on Thursday was I sold these calls somewhere down here, and when price was down here, and the calls were basically worthless. And it was down here because it was on Thursday. And I should have held them because on Friday, I had 235 calls is what I had. And look where price got to. It hit 235 to the penny. And those calls, even if I bought them on this morning, I think they were 6 cents. And over here, they were, I'll show you in a little bit what they became. So when I look at this, I think there's really two ways to have played this move. I'm anticipating there's going to be strength in IWM. It does go lower than I thought it was going to go. It set this low here on Wednesday. And then on Thursday, I know there's a potential move coming or a potential event that can affect the market happening on Friday with Powell talking at Jackson Hole. And that could be bullish for IWM. And so I should have been trading this with equity here on Thursday. It should have been at the top of my mind. Because if you look here, look what it did. It tested the low of Wednesday and bounced, and basically it was up completely from there. If you're going to catch a bottom, that was the bottom to catch. And hindsight is 20/20, I know. But I guess I didn't have my head on straight. Now let's just think through what might have happened, right? So let's say I did do that, and let's say I got risk free, and by that I mean I sold a portion of my position as we rallied, so that if we did hit the stop below right here, say I go right close to the stop below this day here, if it does stop me out, I'm either completely flat, I didn't lose any money on the trade, or slightly green, depending on how much I sold as it rallied here. On Friday, before the news event, it's really a 50-50 thing. It's a coin toss, because at that point, Powell could say, no, we're absolutely not doing any rate cuts. And then this thing would absolutely plummet. And as you can see from this move, this move was so fast. It was instant up. And on that kind of a move, if it shot down, it could have blown through my stop. I could have gotten a really bad fill. And so I could have actually lost a little bit of money, even if I'd done everything right over here. And so, it's who knows what's going to happen? You just sort of play the odds and do the best you can. That's what you do with the equity approach. And if I had done that, on whatever equity I had purchased from here to this spot, I was up, 1.58%. Ultimately, if I held it all the way to the highs of yesterday, it was like a 5% of whatever equity I bought increase. That's pretty awesome. You cannot complain about that for sure. What I realized as I was watching my options play out was the opportunity that I missed on those options. Let's say that on the morning of the Jackson Hole speech from Powell, where we knew there's this catalyst event coming and something big could potentially happen. Let's say I bought the August 29th 240 calls, and I could buy them on that morning for around 10-15 cents, somewhere in there. And then the news happens, and watch what happens to this value throughout the day. It just instantly shoots up. So you go from, let's say I got it for 10 cents because the math is easy on that one, and I moved all the way up here and I sold it for $1. That's a 10x. 10x. So you buy $100 of this 10-cent option and you end up with $1,000. That's an amazing thing. But of course, we didn't know that was going to happen. So how do you play that? And this might come as like, well, no guff. Some people might be watching this and going, well, no shit, Sherlock. Pardon my French. But this, I didn't realize the effect, the moves that these options could have, especially on not ones like this where you're aiming further out, but if you look at a 0 day, because that's what I basically had. I had bought an option that was going to expire on Friday a week before. And my thought was, if it goes down, 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 I'm actually just going to buy it. But on that morning, I wasn't thinking that it could actually rally that hard out of this. I was just thinking, this thing's done. I'm just going to get rid of it. I don't know. It was a terrible plan, but I didn't realize that what could happen with that option, because let's take a look at what did. This is my April 22nd, 2:35 calls. So this is now a 0 day option because it's the last day the option is going to be alive. And on the morning, I looked at it and they were trading for 5 cents. And they spiked up to 73 cents. And then later, when the rally held, up to $1, 5 cents to $1. So that's a 1,633% increase. And the risk reward ratio, because basically, you're risking it going to zero. So 5 cents to zero is what you're throwing the whole premium away if it doesn't work. That's a 16x trade. So, and that's assuming you hold it the whole way. Obviously, you need to be quick on your toes because you know that at the end of the day it's going to expire. You got to sell this thing at some point. So you got to choose when's your spot. You could have done it here. I probably would have ended up selling it right here in the first move, because then it pulled back and they weren't sure, and then it came up again. I mean, you could have sold it and reloaded when it came back down. But how could you do that? First of all, how could you plan for this, and how could you execute it well? Because, like I said, we didn't know if it was going to be a win or a loss, right? It could have gone either way. Powell could have been dovish, he could have been hawkish. We didn't know, and either way, we were expecting a move to happen. It felt like the whole market was primed, especially with that tight consolidation day the day before. So, what made this move unique and unlike earnings? Because with earnings, earnings are done after hours. You know they're coming, but it's done after hours. This is during regular trading hours. And so everybody's there, the market is active, and options are live. So 0 day options can be played on moves like this. So it's a catalyst event, occurs during market hours. The entire market was in wait mode because Powell's remarks were the only clue that we were going to get about whether there were going to be rate cuts in September or not. And rate cuts are obviously a key market driver, especially for something like IWM. And the market was clearly showing a decision, ready to move higher or lower on news. And so that's all the things you need, all the ingredients you need to know that you have an opportunity to trade here. And so what I should have done, if I had done this correctly, was on the morning of Friday, I should have bought the 0 day calls, and 235 was a fine a fine strike price to target. And it doesn't really matter, I don't think. I mean, I'm just learning about how to do this, but when I chose that strike, it was because there was a lot of open interest there. And so my assumption was, it has a good chance of going there because that's where everybody seems to be focused. And so I could have done the same for puts on the downside. Where are the puts focused? And just as a guess, I'm not sure where they were, but I just said, what if it was 220, right? So people are betting that it's going to go down to 220 if it's a bearish reaction. And so on the morning of, you could have bought some 220 puts for like 13 cents. And then when it tanked, it basically goes to zero. And so you're just going to lose whatever you put in there. Let's say you put in $100 on the puts and $100 on the calls. The $100 on the calls, they go up 1,600%-ish. And the other one goes to zero. So you lose your first $100, but you have this massive multiple on your other $100. And so you win no matter what. The only way you don't win, because there's really two potential outcomes, the only way you don't win is if nothing happens at all. If the guy comes out and says some stuff and market doesn't move, nobody cares what he says, or it gets canceled or whatever. And in that case, you cover them intraday at whatever you can. So maybe you lose, what if you lose both your $200, you lose all $200, right? That is a possibility. It's a real thing that could happen. So choose your events wisely. Now, this is now a thing. This is a thing that I'm going to be paying attention to. And I might have talked to you about this a while ago, but one of the things I've been doing recently is making note of things that I see that happen in the market over and over and over again. And each day before I trade, I've updated my trading app to include this prompt, which basically it's asking me what's the market mode. And inside of that, I have a bunch of prompts that I've defined. So what mode is the market in? Well, yesterday it would have been a catalyst event. So I choose catalyst event, and then it shows me this. It says 0 day options are a great way to play catalyst events. Get positioned before the event and be ready to sell both sides. And so I have this exact screenshot where I show exactly what I could have done for this trade, so I can review it and figure out what I would do if this happened again. I do the same for market capitulations. So we had the carry trade unwind market capitulation last year in 2024, and this year we had the tariff, the Liberation Day dump that happened. And I go through both of those and I talk about how to play those and what to expect, and have screenshots for both because they're very, very similar things that happened. And so I'm starting to do this because I know me. The real difficulty in trading is having the memory to know what to do in certain situations. And if you don't remember what to do, then you won't be able to get the trade. And so that's what this is for. It's forcing me, before I trade every single day, I've got to look at this and review what's going on in the market right now. And, is it just a steady, slow, relentless grind? Or is it the steady uptrend where there's frequent daily higher lows and nice moves up? Are we range bound? Are we downtrend? Are we gapping up? Are we gapping down? For all of these things, I have tips and screenshots to show me what I should be looking for. So each day I can look at them before I trade and remind myself what to do. So this is something that I've done for myself here, because I feel like I need to hammer myself in the head with it to be able to remember this stuff and learn it and drill it in. Maybe for you, it's just a notepad. Maybe you've got a Notion app where you store all the things that you review. Whatever works for you, it doesn't really matter. This is just what works for me. And so I'm an engineer. I'm going to build stuff all the time. And so I've built this. So I hope that makes sense. I hope it helps some of you to think about how you could play a day like this. I feel like they're not mutually exclusive. You could have traded equity and you could have also traded options, and both could have worked. And so I'm not saying that you should do one or the other. I'm just saying, think about these things. Be aware that there are these opportunities happening every day, and recognize when they come, because they will come again. And I know that these catalyst events come fairly frequently. So as part of this, I've got to start paying a lot more attention to what are the catalyst events, the news events that are coming in this next week, and how could that affect the market, and when are they happening? What should I be looking out for? And is there an opportunity there? All right, that's it for me. I hope you guys have a great week trading this week. And let's see how these bounce retracements play out. Hey, if you like my indicators on TradingView and you like the content I'm producing here on this channel, please remember to like and subscribe.